The Borrow Smart segment today being brought to you by rsrhomeselect.com. rsrhomeselect.com. Ways a car loan can increase your credit score. Car loan can potentially increase your credit score by diversifying your credit mix and demonstrating responsible repayment behavior, such as making timely monthly payments over the loan term. However, it's important to manage the loan responsibly to avoid negative impacts on your credit score, such as missed payments or excessive debt relative to your income. In January 2024, the average cost of a new vehicle exceeded $47,000. $47,000. Wow. Ow! Yeah, that's what I thought. Most consumers have much less than $47,000 saved, making auto loans an important type of credit. Before you apply for this type of loan, however, you'll likely want to understand its potential impact on your credit profile. So, do auto loans build credit? It depends on how you manage your account. Some people benefit greatly from taking out auto loans, while others hurt their credit with irresponsible behavior. Discover how to use an auto loan to improve your credit score. Auto loans. An overview. If you don't have enough cash to purchase a vehicle, you can take out an auto loan, which is a type of installment loan. Installment loans have fixed monthly payments, making them fairly easy to manage. All you have to do is make your payment as scheduled. There's no need to track variable interest rates or calculate a new payment amount every month. When you apply for an auto loan, the lender checks your credit profile to determine if you're likely to repay the money you borrow. This can add a hard inquiry to your credit report. Some lenders report to Equifax, Experian, and TransUnion, while others report to just one of these credit bureaus. Personal loans, student loans, and mortgages are also classified as installment loans. Get matched with a personal loan that's right for you today. Do car payments build credit? Taking out a car loan can affect your credit in several different ways. As mentioned previously, a hard inquiry appears on your credit report every time a lender checks your credit history to determine whether to approve or deny a credit application. A new inquiry may cause your credit to take a small hit, but it should rebound if you maintain a history of responsible credit usage. Consumers run into problems when they can't make their car payments on time. If you're a few days late on a payment, the lender may charge a late fee once a payment is 30 days late. However, the lender can report it to the credit bureaus. Having a 30-day late payment may decrease your score more significantly, especially if you had excellent credit before the missed payments. If you continue to miss payments, your score will drop even more, making it difficult to qualify for loans and credit cards. On the other hand, when you get an auto loan, your payment history will be reported to the credit bureaus. Because your payment history makes up a large portion of your credit score, as you consistently make payments on time, your credit health will likely improve. So if you manage your car loan responsibly, it can be great for your credit. In addition, by getting an installment loan to finance the purchases of a new car, you can add to the installment category of your credit mix. And the more diverse your credit mix is, the better it is for your credit. This is because lenders notice that people who are more reliable in paying multiple different types of accounts are less likely to default on their debts. What you need to know about credit scores: lenders rely on multiple scoring models to determine if they should approve your loan and approve your credit application. As a result, some people find credit scores a little confusing. Here's what you need to know to build a strong credit profile. What factors are used to calculate credit scores? Well, we know that the payment history is about 35%. How you pay your bills is about 35% of your FICO score. The amount you owe, that's utilization. That's about 30%. Pay your bills the right way. rsrccpayment.com, rsrccpayment.com. Pay them the right way. Length of credit. The length of credit history is based on your average age of accounts, the age of your oldest account and the age of your newest account. Although you don't need a lengthy credit history to achieve good credit, it can definitely help. Long history of using credit wisely may give lenders more confidence in your ability to make loan payments on time. The credit mix. This is how many mortgages and installment loans and credit cards you have. The credit mix refers to the different types of accounts in your credit profile. Some lenders want to see that you have experience managing auto loans, credit cards, and other types of credit before they approve your application. Fortunately, you can still build credit with a single auto loan. And new credit. This is the smallest of the categories, 10%. And it's the one that people know, so they ask about it most frequently. This is new credit. These are the inquiries, the hard inquiries. So, what is a good credit score? Some lenders issue auto loans to consumers with poor credit, but many companies want to see good or excellent scores before they'll loan you money to buy a vehicle. In that case, it's important to know what a good score is. FICO scores range from 300 to 850. The closer you are to 850, the more likely it is you'll qualify for loans and other types of credit. However, a good score generally ranges from 670 to 739. If your score is even higher, you might get a better interest rate. What are some ways to improve your credit? On-time payments. Avoid taking on too much debt. Pay down your existing balances. And this one's counterintuitive, but request a credit limit increase. If there are errors on your report, dispute them the right way. Haven't looked at a report lately? Cleanall3.com, cleanall3.com, and you can take a look at your credit report with real FICO scores. And no, Credit Karma, Credit Sesame, those are not FICO scores. Those are credit scores. And even some of the banks that give you FICO scores, if you see that they're using FICO Model 8, probably not going to do any good for a mortgage. So can an auto loan help build credit? Yeah, it can really help build credit. And we talk about that. Now, be aware that sometimes if you have an auto loan and when you pay it off, if you don't have something replacing it, you might see a dip in your credit score at that point. Just throw that out there for you so you have an idea of what's going on. That is the Borrow Smart segment brought to you by rsrhomeselect.com, rsrhomeselect.com.